Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my video, if you like my research and if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the market, how it has closed on Monday. Nifty ended up in the positive 14,485.00, 143.65 points in the positive, 1.00% in the positive. Opened around 14,449.45, which is well above the previous closing, and the market has came down 14,421.30. High went around 14,557.50. Let's go to our prediction review. As expected, the market has closed in the positive, but still all three results possible. But there is a hint of bullish market because the warning signal came for the bullish also. But whenever we have that evenly kind of policy, that is very much difficult to trade on those kind of day. That is the reason we asked to keep both options in hand, because we have the weightage on the negative side as well, and we have that volatile indication as well. But the market today, it has opened in the positive, in the extreme bullish zone, and straight away it started to go towards to the positive direction. But after that, it was almost did volatile in the positive direction itself. It has started to move down, but still it has small volatile in the positive direction itself. It is not came down because of the low was perfectly matched in the morning itself, 14,421.30. I'll explain you with our data, because whenever our data is matching the low, this is where the matching in the bullish open target level. So we know that the market is having the advantage of going bullish, because the warning signal, whenever it comes, we should not take lightly those kind of warnings. That is the reason we always keep both options in hand, and the market kept the low in our data perfectly, which is in the 3 point range. We always say 3 point range, and the 10 point stop loss range for the buying. Minus 10 points is for the buying, plus 10 points stop loss is for the selling. So here it is kept perfectly in the 3 point range, which is 14,420.2 is the level. You see the market is inside the 3 point range, perfectly matched, so it is not able to come down, and it start to move towards to the positive direction. And we had two positive target, which is 14,464 pending from 2 days back, and then followed by 14,478. So which means these two targets, 14,478 and 14,464, both got hit yesterday. After hitting that, it went little beyond that level, and one more positive target it has opened, because you see 14,557, we need to check out which is matching like the low. It is not matching. See, we have 14,670, 14,467, which is 3. It has broken that level and then gone towards to 14,531. So if you keep stop loss in the upper side for the selling, you will get 14,541.37. So which means this stop loss level it has broken. See, so if it is broken like that, means the next target will be automatically open. So if you take 14,531 and broken the stop loss, means this 14,595.19 automatically open for the next target. So now we have a fresh new positive side target, which is 14,595.19. So what it shows, we have a downside target of 13,599 and 14,595, which is almost in between 1,000 points only, fraction of 4 to 5 points difference. So which means if you have huge gap like that, means you can trade both options in hand, and at the same time it is not going to be easy to get the profit, because the market will try to move either side, but whether it is going to fall or whether it is going to boom, or we may not know, it will struggle a bit. So small traders better stay away from a particular zone. Otherwise you can take a risk by investing both side options, and you need to take both risk, because if it is not moving as expectation, your both options call will go to zero. So both options call will go to zero. So what it shows that you need to take full risk and wait patiently. A minimum risk like that you can take. You need not to do bulk trades like that, because the failures having the chances to happen. So but at the same time, if you get success, you will get more money. So you need to invest a tolerable price of options up to your risk appetite. You need to check what is your risk appetite. If I invest that particular 10 rupees on each side, the both risk will be somewhere 1500 maximum. So if the 1500 goes to zero, then I'm not going to worry. So that is the risk appetite for me. So then I can take chances like that, investing both side 10 with the correct strike price. You need not to buy blindly for 10 10. If you buy too much gap between 10 10, means even though the market falls or market rise, those will go zero. But you need to get the perfect range of 10 10 option. Then only if the market is goes bullish or market is goes bearish, then you will have the chances to gain, because right now the premiums are very much high. And that is the reason I asked to stay away from the market on yesterday Monday as well. And at the same time, before going to the prediction, how what are the calls, even we given the Tuesday market, because first you need to know whether you want to carry forward or not, what kind of risk we are having. So I given the call in the Tuesday's data of the support and resistance levels. So we have once again volatile day on the positive side 0.77, and the negative side which is 2%. So which is, we have volatile day. So it is not going to be easy to carry forward. So that is the reason I want high risk traders to trade, small traders to stay away from the market. And Monday data, which is clearly indicated that the market is having 90-25%, but the evenly poised will give a lot of headaches, because of the results are evenly poised of 33.33% chance. So we may not know how the market is going to be, but still there is a one hint, which is the warning signal for the bullish market. So the warning signal is bullish market, means we need to trade with cautiously. So um, if the market is opens in the positive, it might go towards the positive average. That is the plan, because we have the pending target 14,464. So which is matching three data, which is matching 14,006 14,464. So if the market is opens anything above positive minimum, it will try to go 126 points. And the market, after opening a gap of, it is not able to break 14,420. It has kept perfectly matched, and then within no time it has gone towards the positive as well. So we still high risk traders are keeping both options in hand. 14,400, I mean 14,000 put option for 78, and it is already gone down around 20 or 24 somewhere. So and I asked to exit somewhere around the call option in the morning itself. But still small traders, we are not trading, because high risk traders, they can hold, because we are still having three complete full days. So from 24 to once again it might give you an exit for 78. But still the small traders and others already exited with a stop loss of 80. This is the high risk trader, because the stop loss we given in the 14,000 put option at 2 days back itself at 80 cost to cost. But some high risk traders, they can trade, because high risk traders, they can take a risk of full. Even if it goes zero, it won't hurt them, because that is the way it is for the high risk traders. And we also had these two targets, which is 14,464 as well as 14,470, both got hit. So we thought that market will try to fall down. It was a bit, but after that it started to move once again and close that positive side and opened a new target. So I'll explain you that, because we want to go with the both minimum 10-10, otherwise strictly stay away from the market. Very simple as that. We don't want to participate in the market, because it is not going to be easy for the small and safe traders. High risk traders, they can do anything, because they can recover even if it is, but I want to go for a bearish, because the high both targets got hit. So I thought that the market having the chances to fall, but soon it kept the low perfectly. I wanted to play safe, so we exited this 40,600 put option somewhere around 189, because the market has clearly shown the low is matched, so high is opened a new target. If it is like that, means you need not to take risk, because the market will have the chances to go positive as well. The lower side is there the target, but it might got it on the um, next week also. So sometimes it does happen, so I want to play safe. So we asked to exit from this 14,600 put option, which we bought 180 to 85, somewhere in the range of 189. So we don't want to take risk at all, but it has went 210, but still I don't want to take risk. Instead of taking in the current week, we took the risk in the next week contract of May 6th contract, with combination 14,900 and 14,600 put option both put together, and we bought it and holding for a 1 week tenure, because we have the downside heavy target. The market has to come down as per the CPR, but even the low is perfectly matched, means it won't come down. So that is the reason we want to play safe. And clearly the reminder also given, whatever the put option exit at the cost to cost, we don't want to take any chances. We will wait, because the premium are very much high, and after that there are no calls given as well. So it is very tough day, but still we didn't participate in the big way on Monday. Let's wait and watch. That is the method. And about the Tuesday data, which is clearly indicating 25% positive and 25% negative, and the market is still volatile. So which means we need to play once again much more cautiously with investing both sides. It is not going to be easy, because it is evenly poised, but still you can keep buy both options in hand and wait, because the both side targets are there. The negative side target, which is 14,590, sorry, negative side target is for 13,599, which is huge, and 14,595. So in between 1,000 points are there, so we can invest minimum of 10 points. So 1,500 we can take risk. Even if it goes zero, we can recover that money in some other market, but we need to buy both sides. That is the plan, because of positive side target, which we are having up to resistance level 5, which is 14,580 and 14,588. So those two levels having the chances with the stop loss, which is matching with the data, and exactly matching the resistance level 6, which is 14,596. So we are having the penny target 14,595. So this resistance level 5 and 6, we have the chances to resist the market on Tuesday if the market goes up. But at the same time, if the market is uh, opens anything below volatile level 2, which attracts the extreme bearish market, it might go towards to 140 points, or maybe 95 or 114. Anywhere, if the market is keeping the low perfectly matched, it has a chance to recover. Otherwise the market will start to fall down heavily, because of the downside is also having huge. But pivot, anything not breaking the pivot, then only it will go down further. Otherwise, if the pivot is breaking, it try to do oscillate in between volatile. So it is a volatile day, means normally it will try to hit the positive and hit the negative average. So it will try to oscillate in between. We have the target of 14,595 and the downside target which is 13,600 range. So almost in between 1,000 points, which means it's not going to be easy to trade. You need to keep a lot of patience in the market to hold the options. Whoever holding the options for such a long, they will make money, but you need to keep full risk, because that is not certain whether the market will go down to that much deep or go up towards to positive that much. It is not going to be easy to trade on this kind of day. And Tuesday the extreme bullish market has to open above this level, and you need to keep stop loss in this range. Normal bullish market, anything opens in the positive, you need to keep 14,443 as a stop loss. Extreme bearish market, anything opens below this level, if it is not breaking this particular stop loss, it will go extremely bearish. Normal bearish, which is open anything in the negative, and you need to keep stop loss 14,529. So these are all the stop loss ranges. But in the volatile market, stop loss ranges still having the chances to break. But still, even though in the volatile market, if those stop loss ranges are not hit, then it becomes a bearish or bullish. So that is the way we are giving those stop loss ranges. And this target we are only tracking, and the new target which is 14,595.19 is in hand, and the downside target which is already we are tracking for almost 7 days. Today is the 8th day. So these two targets is the follow we are tracking. Downside target is bit heavy. Positive side target which is having only 110 points roughly. So downside targets almost 900 points are there. So which means you need to keep a small put option, even 5 rupees, 3 rupees, 10 rupees, whatever the tolerate price, even if it goes zero, and you can tolerate and go, that kind of a put option, you need to always keep it in hand, because if the bearish is catching, then the points will be heavier and you have the potential to get more profits. There is no certainty, but you need to plan according to the risk. So we can hold a small put option even if it goes zero like that. So if the potential is there, we need to keep some options always in hand. So I prefer to keep some small put option in a hand. Even 5 rupees is fine, even 375 goes zero, that is not going to harm us. So that is the plan you need to keep. And the as per the volatility, we need to keep both options and minimum 10 points. So we can able to maximize the profit size and up to 3, because these are all the rules which always we used to follow, whether it is giving results or not. Still it gives much better results if you bought in the 915 with both 10 rupees. One will give you an exit minimum of 20. Yesterday that is what happened. And 800 or 850 call option, which from low of 11 rupees, it went 27. So that is the way it gives you a result. So you need to keep both options in hand due to the volatile market. Volatile day, you must have to keep both options in hand, because we don't know which side it goes, because we have the target of both sides. The gap between the target is huge. That is why I'm repeatedly telling. And small traders, if you don't want to invest both side, minimum of 10 because the premium is very much high. Even the 10 points, if you are pick, the premium is too far away. So for them, you need to take minimum of 1,500 risk. If you don't want to take risk, 1,500 for this next 3 days, because it has a chance to go zero this 1,500 as well. But at the same time, there is an option, possibility to go big numbers. So plan whether you want to take the full risk or not. If you don't want to take the full risk, better stay away from the market. Otherwise, buy a small 5 rupees put option, let it be for next 3 days. If it is gives you a return, you will enjoy. If it is not, then you can recover this particular 5 points of option in some other day. So let's see how the market is going to give us on Tuesday. Thank you.